I'm Candace, a licensed real estate broker and investor. And we have our real estate experts who are licensed, Melissa Morris, Teresita Neo, and we have Melanie Gerber. And today's topic, we're going to talk about the profit and loss statement mortgage loan. So, and we will refer to it as a P&L loan as well. So, Melanie, can you start us off to kind of break down what is a P&L loan?
Yeah, so a lot of you have to be self-employed, okay? And on a self-employed borrower, basically, a lot of times you write off most of your income, and that creates a problem for qualifying for a home loan. So what a profit and loss does is the tax accountant or CPA has to be licensed, can evaluate your taxes for the last 12 months. It's not year to year. It is the last 12 months. And they can put together a profit and loss of what your real profit and loss is. And you can use that versus using a bank statement program or versus using what income you reported, because most people don't, watch what they want to pay in taxes. So they write off most of their income, and that creates a problem when purchasing a home.
It absolutely does. Being that I'm a self-employed and small business owner myself, so I definitely write off a lot on my tax as well. So let me ask you this: it has to come from a licensed CPA, or
it has to either be a licensed tax professional, tax preparer, or a CPA or an accountant. Okay. So it could come from just H&R Block licensed tax preparer. It just has to come on their letterhead, and they have to be currently licensed for whatever state you're doing it in.
So if you have like a bookkeeper, and they keep your books for you, you pay them monthly, is that something you guys consider, or how's that work?
I will have to check on that. You may have to throw it through this because most likely the bookkeeper is not going to file your taxes. Right. They're going to give all the reports over to the tax preparer. So at that point, the tax preparer can probably do the profit and loss. But like I said, we're in June right now, so we would actually require June through May for a full year. So it may not be on the same time as a tax preparer, but most tax preparers for a small amount should be able to create it.
Okay. All right. What do P&L statements show?
Basically, it shows your actual profit. So the taxpayer or whoever uses 12 months of bank statement to create your total gross sales, and then what your actual expenses are each month. And it breaks it down based on rent for if you rent, property, that you're working out of. It will be any of your expenses during that 12 months. So they're going to take the total of your gross minus your actual expenses, and that total will then be divided by 12 for a monthly total.
Okay. And how is proof of income determined on a P&L statement?
It is proof. That is why you're using an accountant, a licensed preparer, or whatever, because they're verifying that they've reviewed your incomes.
Okay. All right. And so for me, it's definitely a great option. And tell me some of the downfalls with going this route.
Again, it's just like any other non-QM program. They are going to be higher interest rates. And most of the time, if you're purchasing a primary residence and you have a good score, you may actually be able to go with 10% down. Okay. They're really going to look at your credit score and all of that. But it's going to require at least 10%, if not 20% down, somewhere around there. And no mortgage insurance on any of these programs. So that's the one plus. Mortgage insurance is for the banks. They're just requiring more money down to have some security that you have, enough into it that you're not going to let a property go.
Okay. All right. So we have Melissa and Teresita. Do you have any questions about this P&L loan?
So when it comes to the P&L loan, I actually had a client, and they are self-employed, and they're having a hard time trying to qualify for a loan. And it's a situation where the spouse's W-2 and the other party is self-employed. When it comes to the P&L loan, how are you able to make the two? How are you able to make the two work, or can you?
You can. So you're gonna, if they're doing if they're doing gross income, they're only gonna look at that business income. So they're gonna pull out your W-2 income from growth to calculate out gross sales. W-2 income, disability income, other income like that can still be used. But you also, if you have a business bank account, it just makes it a little bit easier. But you can do it on a personal bank statement. You can do it off a personal bank statement. I had one that was a boxer. He did it on his personal bank statements because his business was actually units. Okay. And so he just kind of separated it different, but they took out the SSI income from the wife.
And when you say take it out, they're not using it.
They didn't use it till we added her. Once we added her, then they will actually add that income back in. So you have your W-2 income, and then you have your business income. It's just not going to be used in the total for gross sales that business produced during that 12 months. It's going to be a separate line item, basically.
Okay.
So with this type of loan, you would have to ideally be reporting more profit, I guess, right? Than loss.
Well, they're not looking at your loss. They're only looking when they do the profit and loss. If the tax preparer or whoever does it correctly, they're going to look at all sales. You're giving them the expenses. So they probably shouldn't be taking it off. We're never going to see the bank statements. The only thing they want sometimes is a 1 month bank statement to prove that you have the down payment, so they may require 1 month bank statement, but they're going to use an average of the 12-month gross. They're not actually going to see it. The tax preparer is actually going to sign off of what income you're going to use. So that tax preparer, let's say you have $100,000 in, just as an example, in gross sales, all your write-offs, probably want to limit, but, he didn't really include medical and stuff because he was over that age, so it was just some of his travel expenses and stuff because he traveled to Japan for WWF fights. But you just see the expenses broken down. You see the net. So let's say you had a $20,000 in expenses for the year. That gives you a total income of $80,000 over that 12-month period. Divide that by 12. That is what your income will be. It's that simple. It's actually self-employed buyers. Sometimes it's almost easier to do it that way, as long as the CPA or accountant. And if you file your own taxes, There are CPAs that will look at your prior years because they do have to verify that they've at least reviewed your tax returns for the last couple of years. Okay, your tax returns or your revenues.
Okay. All right. Well, that does sound like a great option, again, for people who are self-employed small business owners. So just giving investors and just other options of ways of going about getting financing for investment properties. Do you guys have any more questions before we let Miss Melanie say goodbye?
Yeah, as far as the credit is concerned, what was the minimum for the P&L loan?
For the P&L, you really want to be higher than you probably want to be in the 700s on the profit and loss, but that's, they will do it lower. It's really based on how much you're asking for, how much down you have, and your scores. I want to say most of the profit and loss are 660 at least or higher.
Okay.
And then I had one more quick question. The last question I had was, so as far as like your standard amount of time when it comes to having that 2 years, I know you said the last 12 months is what's looked at. When it comes to being self-employed, is there anything else they look at for your self-employment? Only the last 12 months. So you could have just been self-employed for the last 12 months and that's it. Nothing else is going to be looked at or considered.
Correct.
Okay.
The CPA or whoever does it is going to prepare a letter for the profit and loss, and then they're going to prepare a letter saying that they reviewed your tax or they know that you've been self-employed for at least 2 years.
Okay. Thank you.
Well, thank you, Miss Melanie, again for sharing.
No problem. Thank you.
And educating us. We appreciate your time and have a great day.
You too. Thanks, you guys.
All right.
Nice meeting everyone.